the next program in the schedule. I'm delighted to invite our good friend Rafe Mazer, Director of Fair Finance Consulting. I'm not going to do a lot of introduction. You'll do that yourself. But he's made a long flight from the US to Addis, and I asked him this morning if he has slept well, and I think he's learned the trick. So he's gotten a good night's sleep. Raf, the stage is yours.
It's very nice to meet all of you. And yes, I am very well rested and incredibly excited to be here. And I want to start, before I dive into my portion of the event, and thank the Minister, Minister Ali, because there were several points that were raised that I want to touch on that I think speak to why we're here and why we care about consumer protection. And the Minister mentioned digital makes so much possible. I think, in particular, as she mentioned, there's the potential to greatly increase consumers' ability to choose. There's the ability to deliver new products that honestly just would not have been possible from a business standpoint without the economies of scale and reduction of cost that digital provides. But in order to enjoy all those benefits in the digital economy that we want to see, we have to ensure, as Ermias mentioned, that the first time you go onto that app, the first time you try that new service, and you give your personal or financial information, you trust it enough to use it. Because without uptake, there is no use. Without use, there is no innovation. And so what we'll do today is I'm going to share a bit of my experience on what I think are some of the most important consumer protection risks and issues we should address. We have wonderful panelists, both from the region and within the country, who will share their experiences and expertise. And also, we have several areas where we want to hear from you all, because I'll admit, I don't know the Ethiopian market that well. We're in an early stage. And so we really want to hear your feedback on what the priorities should be as we set a consumer protection agenda. So let me see if I can work the advancer. I'm not the most technologically savvy despite the industry I work in. So just to start, consumer protection matters for every product and service and for every consumer in every marketplace. But when we talk about digital, I think we need to think about what's going to be different, right? How do we have to adapt our policies in consumer protection to the digital environment? And obviously the first thing is that digital projects can scale at a speed that is unprecedented previously. Things can go viral and you can have millions of users within weeks. This was mentioned both by the Minister and Ermias. We have technological literacy challenges, right? We have traditional literacy, but tech literacy is a big thing as well. Trying to navigate a USSD menu is not always the easiest thing for me, and I have full literacy and I'm familiar with the technology. You are sharing your information with far more entities than you thought, and with entities you didn't even know. Third parties that the bank you use shares your information with, maybe for KYC, maybe for security, maybe for those marketing offers you honestly didn't want to receive. So consumer data rights are incredibly important. And also, when things go wrong in a digital environment, consumers need to be able to quickly and efficiently resolve these problems. And as Silver will share from the Ugandan experience, that is not always the case. So what I'm going to do now is I want to run through, I'm a researcher by background, I want to run through a bit of what we've learned with some examples of how these risks are manifesting in digital financial services markets. And the first thing I want to share is, if I could make one argument for why we should care about consumer protection in digital financial services, I would use this experience from a survey we did of digital finance consumers in Uganda. And we asked consumers, we surveyed about 1,000 consumers across Uganda, and we asked all of them, have you ever had a problem with a mobile money or digital finance product. And of those who did have a problem, we said, okay, well, did you try and resolve it? And what this graph shows is, you can't really read it, but the last two where you have the large orange and the much smaller blue bars. So this is consumers who either, in the first one, reduced their usage of digital products or stopped using them altogether when they had a problem. And the blue is the percentage of consumers that stopped using digital when their problem was resolved. The orange are the consumers who stopped using digital whose problem was not resolved. So you see 7% of those who had a problem and it got resolved reduced their usage of digital. 19% of those whose problem was not resolved reduced their usage. More important to me, only 1% of consumers stopped using the service if their problem was resolved. 8% of the consumers stopped using the service if their problem was not resolved by the service provider. So this matters, not just because it's the right thing, but because it's an essential ingredient to have sustained use and uptake of digital services. Consumers need to trust things will go wrong in life, but they need to know when they go wrong, I will have my day and I will get restitution. And then moving on to one of the other risks I mentioned, about scale up. So I think we don't have to look very far, just go a few hundred kilometers south to Kenya to see how fast these products can scale. Kenya's digital credit market is famous for having sort of taken off in the past 10 years. And what we've seen when we look at the largest providers in Kenya, I'll give you an example. We have one product, Fuliza, which is an instant overdraft product on mobile money that charges, I believe, 1% interest per day. So you can analyze that. It can be quite expensive. And they do 2 million loans a day, which is just think about that. 2 million loans originated in a single day by one product. And you can see in the graph on the far side, this is administrative data we worked on with the Competition Authority of Kenya, sizing the digital credit market. And the pink bar is Fuliza when it entered the market. And you can see in the span of 6 months, it overtook every other product in terms of total value dispersed by month. And remember, it is giving loans that are much smaller than any product. So it gives the smallest loans in the market, but it has the largest lending volume in the market, which really says something. And it has become a phenomenon. But also digital credit, it's addressed some needs, but it's raised some risks. And what this bar graph shows is the FinAccess National Survey in Kenya. And it's 2016, 2019, 2021. And it was measuring financial health. And the gray bar is the number of Kenyans that had low financial health. And this is measured by asking several questions, such as, having to sacrifice household expenditure or food consumption to pay a debt. That's one example. Or not feeling like I can make ends meet. And you can see over the course of 5 years, in the heart of the digital credit boom, you had a more than a tripling of the Kenyans with low financial health ratings. We also did a survey when I was at Innovations for Poverty Action of digital borrowers, and 77% of them had either been late or failed to repay their loan at some point. 58% of them had sacrificed non-food expenditures in their house to pay a debt. 55% of them had sacrificed food expenditures to pay back debts. So this is where fast scaling products without proper supervision can create issues. And it should be noted that these digital credit was launched in Kenya in 2012, but it was only 2022 that the central bank put forth regulations on digital credit. So I think that it shows you we cannot have policy voids for that long on these fast scaling products. We also have issues of transparency. This is data from Nigeria, where we did an audit study to see how well our fees disclosed in digital environments. I'm sure you all have seen those, long terms and conditions that none of us read, and we just check the box and move on apps and other things. There's a real risk in digital that some of the terms and conditions can be hidden or can be skipped through in the digital environment. And we see sometimes intentional obfuscation of terms. So in Nigeria, we tried to see how easy is it to get pricing information for digital payments products in the market. And we found it was much harder than we expected. Only 2 of 29 providers listed their cost of their products on their website. Only 27% of customer care representatives could even tell us the cost of the product accurately. Think about that. You make the effort to even call into customer care to learn about the product. They can't even tell you how much it costs. We also saw things like there's a cap on USSD transactions in Nigeria, so consumers don't have to pay excessive costs for digital transactions. 11% of the transactions that we ran exceeded the USSD price cap. We also saw 62% of customers were charged for account opening, which is not permitted in Nigeria. What they were doing is they were creating this mandatory ATM service activation fee. They weren't allowed to do an account opening fee, so they just given a different name. But it was compulsory for any product, even if you weren't going to use an ATM. So this is where you really need to constantly monitor the pricing structures because it's easy in a digital environment for hidden fees to accumulate. Another risk we see is fraud. So this is looking at Kenya, Nigeria, and Uganda together. We did these nationwide surveys in all 3 markets, and we asked people, a long list of possible challenges they might face with digital products. And you can see in Kenya and Uganda, the top risk was phishing by phone or SMS, and it was the second largest risk in Nigeria. In Nigeria, agents charging to complete a transaction was the largest risk. That's a particular issue in the Nigerian market. So fraud and phishing, how many of you in this room have received either, a suspicious SMS or someone calling pretending to be customer care from a service provider asking you for information or maybe wanting some products? Yeah, so quite a few. In my initial conversations in Ethiopia, I've heard this is an emerging issue. And so it's something we want to start to address. I'm working on a project in Uganda where we're developing basic integrated voice response, so voice recording, learning content on fraud prevention and how to avoid fraudsters. And we're going to roll that out at a national level. So even if you don't have literacy, you can learn how to avoid fraudsters. There's other types of fraud that are emerging in the app stores. So this is, I'm sharing an example now. This was a lender in Nigeria, and something we did with some researchers was these app stores have just incredible amount of data that we can use to identify fraudulent fintech providers. And you can see in this one, the reviews, people are complaining, that they're not getting a loan. I applied, I was debited some sort of processing fee, but the loan never came, things like that. This is a common ploy. Well, you'll see, so-called lending apps, and sometimes they don't really offer a product. What they do is they have you pay a registration fee, and then you never qualify for a loan. So it's a way to kind of collect some revenue. So what these researchers, Jonathan Fu and Myrtle Mishra, did was they created a machine learning algorithm that scrapes the metadata of all fintech apps on the Google Play Store and does word analysis of the reviews. And what they're able to do is to automate a process where they could identify how many apps were likely fraudulent and were likely legitimate. And in India, Nigeria, and Philippines, the dark green is the highly certain legitimate. The light green is ambiguous, where there are some warning signs, but not a lot. And then the light red and dark red are predatory or pure fraud apps. And so you can see how much the app stores are getting flooded with fraudulent fintech apps. And it can be a lot in a market like India, where you have upwards of 2,000 fintech apps to monitor that on your own and to look at every app. But if we use machine learning like they did, we can automate processes and make them a lot easier. So all these new risks are emerging in the digital economy, and our job is getting more difficult to manage consumer protection risks in the digital economy. You have, as I mentioned, a lot of new fintech providers. You also have these lines that are blurred between what is finance and what is commerce and what is retail. And a lot of times you have things like embedded finance, where financial services are embedded within your e-commerce experience. You have these third parties that may be now getting your data from your bank to do transactions. You have issues around data protection. It's good to see new data protection laws emerging. So this is a critical moment to figure out consumer protection for a digital economy like we want to see in Ethiopia. Fortunately, through my research, I've seen that there's not just risks, but there's opportunity. Because just as digital services create a lot of data about you, they create a lot of data about the economy. And so what we've been trying to do with these examples I show you is harness this new data to better measure and monitor risks in a way we never could in the analog economy. I won't go into detail with this, but I'm happy to discuss that further with others. And regulators across the globe are taking advantage of this. This is some data from the State of Soup Tech report by the Cambridge Center for Alternative Finance, which I really recommend reading. And they found that they interviewed policymakers around the world to see how they're using new technologies and data for their mandates. And as you can see, consumer protection was the most common use case for this data. So I really believe there is magic in the data that we can use for consumer protection. As I mentioned, I don't know Ethiopia's market that well, but what I've heard and what I've learned so far is that you are at a crucial inflection point. You have the advantage of your digital financial services market is only emerging now, when we can learn lessons from our colleagues from across the region. And we have an important consumer protection directive that was established. We have this vision for Digital Ethiopia 2025. And I've seen a lot of appetite and interest for cross-sector collaboration. So I feel like Ethiopia is at a good point to really move forward with the consumer protection agenda. And I hope that's what this conversation will be about today. And so that's where, as a next step, I want to ask you all 3 quick questions, and then I can turn it over to the panelists. So we have a Slido, which is a online polling, and so you can we want to ask you a few questions, and so you can either scan the QR code, or if you go to slido.com and you put in that number 3314128, that will give you the it will give you access to the questions. So as everyone just take a few moments to get that set up. And once you're in, you can just start to vote. And so the first question is, what do you think are the most important consumer protection priorities for Ethiopia? And so of these 5, I would ask you to pick up to 3. You can do 1 or 2 if you only think 1 or 2 are the main priorities, but please no more than 3. And so let's start voting, and we'll see what you all think. Excellent. Well, you can keep voting, but I'll just remark on the partial results. Yeah, so this is great to see that fees and pricing transparency was listed as the top concern, because that's usually the first place you start with consumer protection policy, right? It's the basic principle of you should know the product you're getting into and the terms of service. And this is also something that you can take action on relatively quickly. And I think it's, with regards to the fraud issue, I'm really glad to see that, because as I mentioned, it's emerging and it's a huge issue in other digital markets. But if we're more proactive, we may be able to address it before it reaches scale in Ethiopia. And then certainly complaints handling and redress is the backbone of any consumer protection system, because things will go wrong. But what matters is how quickly and how well are they resolved. All right, well, let's move on to the next question. Okay, so then the question is, which consumer protection activities would you prioritize in the near term? We can't do everything, but if we're going to do a few things, and the options are expanding the consumer protection policy mandate, conducting research on consumer protection risks, developing financial capability programs, increasing consumer protection supervision and market monitoring, or develop industry initiatives on consumer protection. And again, if you can just vote for up to 3. Increase consumer protection supervision and market monitoring. You all made my day, because there's nothing I love more than doing consumer protection market monitoring. As you can see, we've got all kinds of fun data analysis and research tools that we can use. And then the second one related is the policy mandate. So it's clear to me from what I'm hearing from you all that, really focusing on the policy and regulatory and supervisory side is where to start. And, that's everyone matters in consumer protection, but the most essential actor generally is the regulator, because only they have the unique power to make rules and enforce rules that are binding across the economy. So it's good to see everyone orientated towards the policy side. And I think conducting research on consumer protection risk goes hand in hand with market monitoring. Because as you saw, a lot of this market monitoring, consumer surveys, algorithmic analysis of fintech apps, that's both market monitoring and it's research and data. Excellent. Let's move on to the last question, then I'll turn it over to the panel. So you all are interested in research and market monitoring. So this is an open-ended question. If you can just do a word or two response. What do we most need to find out about consumer protection in Ethiopia? What is the thing we don't know enough about that you want to know more about? I like that someone put gender difference on consumer risks. You can absolutely see that in some analysis. I think issues like in certain economies where women don't feel as empowered to make formal complaints is something that we've seen. Learn more about emerging frauds, usage of data, financial literacy, fair competition. This is great. Robust legislation, regulatory mandates, fraudulent companies and apps, creating awareness of consumer protection. Excellent. All right, I see some people are still typing, so we'll let people type a bit more before we close this down. And obviously this, you're starting to see some clusters, right? So the popular ones at the top, we have digital literacy, data protection, consumer, regulatory frameworks, consumer awareness. All right, well, I don't want to cut off the good ideas, but and you can keep entering them, but I'll just move on in the interest of time. And so now you've heard enough from me for the moment, so I'm going to introduce my panelists. What we'll do is I'll bring up one panelist who will present their case study and experience on consumer protection from their market. Then I'll introduce the next panelist who will present as well for the 3 panelists. And then we will have a question and answer at the end for all the questions. So if you have a question for one of the panelists as they're going, write it down and then we can address it at the end. And so let me get my notes. The first panelist that I want to introduce is a colleague and a friend and, to be honest, a personal inspiration to me. I've known him for about 10 years now, Francis Kariuki. And so he's an economist by background, specializing in industrial organization. And he has more than 30 years of experience in public service, which I just think is such an incredible gift to Kenya. And he is well known as the immediate former and the first ever Director General of the Competition Authority of Kenya. He ended his second 5-year term in January of this year and is now a senior consultant on competition and trade policy with Bowman's Law and an advisor to the World Bank Group, and was the founding member and first chairman of the African Competition Forum. And if you want to know about competition in the digital economy in Africa, there is no one no one better to learn from than Francis. So, Francis, I'll welcome you up.
Good morning, everyone. It's my pleasure to have this chance to speak to you about consumer protection, what I may call consumer liberation, on 1st of June 2023. And for me, it's an important day because 1st of June is when Kenya got its self-governance from the British colonists. And therefore, it really relates to what I'm talking about today. And let me take this opportunity to thank the FSD for inviting me to share with you my experiences, not only as a regulator, but also as a consumer who has benefited from the digital economy and who has been infringed by the digital economy. Right now, I have a matter with my bank because I've been so suave. I've just been doing online banking, and a month ago, my accounts were cleared. So you see the benefits and the challenges we are facing. So I'll share my experiences as a regulator and also as a consumer. And Rafael has really placed a lot of gratitudes to me, but Rafael has been quite a person who has helped shape the competition regulation in Kenya, because as I conclude, you see the kind of market inquiries we have conducted in Kenya to be able to arrive at an optimal regulatory position to balance innovation and also to be able to support and protect the consumer. So my whole discussion today will be the movement from the analog to the digital, the benefits and the challenges we face as regulators and also as consumers, and how we can be able to mitigate against those challenges. We have seen a lot of digital transformation in Kenya in many different sectors of the economy. And let me thank the policymakers in Kenya for not only diving in the deep end and creating sandboxes where there were no regulatory regimes to help improve the digital economy and also the platform economy. And Kenya, and I think now you're relating with the people who introduced money transfer systems in Kenya, Safaricom, where in my room I saw Safaricom advertising in Ethiopia, and they're already in Ethiopia. Kenya has been a trailblazer of money transfer systems and money payment systems. And I remember when I was a young boy in school, and I used to write to my dad and tell him that I need some pocket money to support me in school, is that he used to go to the nearest post office, which was 30 kilometers from my home, to write a postal order, which would take 4 days to arrive in my school. And then I take it to the bazaar, the accountant in school, which will take 3 days to put this money, discount this money order. And therefore you see this process was taking about 7 days. And also the transaction cost of my father now moving from where he was working to the post office and back to where he is working, those kind of transaction costs. So we moved from that kind of transfers, and then we became efficient. We started sending with the public service vehicles. Still, he could go to the nearest, there's the time now I was working, I think about five years after that. I could go to the nearest public service vehicle, and then I put some money in the envelope, so that my mother can leave her farm and wait for this public service vehicle to arrive at that bus stop so that she can receive the money. And she doesn't know when the public service vehicle will arrive. She didn't know whether the money will arrive in that envelope, but it was more efficient because she would receive it within one day. But the risks which were involved. But now, voila, Safaricom came, the M-Pesa. We could go to the bank, withdraw the money, go to an agent, put it in your wallet, mobile wallet, and then you send to your mother because she has that mobile wallet, and then she would go to an agent who was maybe 1 kilometer or 2 kilometers from her farm gate to withdraw that money. So you can see is that now from one day it has been moved to about four hours. And we thought we have really reached, the Ararat of efficiency. But still there's a lot of market dynamism in the sense that we now withdraw money from my bank account, from my seat, I put in my mobile wallet, send to my mother, who is in her farm, and instead of going to withdraw from the agent, she buys her groceries from the shop next, and then it's delivered in her farm gate. So within 2 minutes, or within 30 minutes, you can see money has moved from Nairobi to 300 kilometers in the heartland of Kenya. And that kind of velocity and that kind of time saving, those are the consumer benefits which came with money transfers. Taxi transport. I used to school about 300 kilometers from my rural home. And we used to travel overnight, and there was only one transport company. That was a bus company. And I hear these days there are some digital transport companies is that you just call them or you write to them and tell them I'll be leaving my house at 11. They'll come picking you from your rural home and drop you in Nairobi. I used to book 3 weeks before the day I'm moving so that I can. And you can see how the platforms have helped the transport system. Not to mention also the taxi system in Kenya. When I was young, is that we had these yellow taxis. And to move in a taxi in Nairobi, then you are a person of class. It was not for each and everybody. It was for the high class. And it was highly regulated, and it was concentrated only in Nairobi. Then came up the digital tax hailing, where there's less regulation, and we have seen this expansion not only in Nairobi and the big cities, but also across the whole country. Not to mention, and Her Excellency was here, the benefits of the platform economy and the digital economy, is that we have seen creation of 4,500 jobs in this transport. The other movement we have seen, it's in the banking services, where I don't need to go to my bank now. Since COVID, I had not stepped in my bank or on my ATM, is that I've always been doing online banking. That saves me a lot of time. And compared to the brick and mortar banks, not only is it saving the consumer, but also the banking sector. Because what I'm seeing in Kenya now, ATMs may face what I call a Kodak moment. A Kodak moment. Who has a camera these days? Oh, okay. The pressmen, they usually carry cameras, but for us, is that the phone now has become everything. That is what we call a Kodak moment. So the bank's ATM, in fact, when I go to other countries, when I see people lining outside on an ATM, I always ask myself, what's what's happening. And this kind of low investment in the banking sector, I expect these benefits to be transferred to the consumers at the end of the day. And these are benefits we are seeing in when we digitize the banking sector. The commerce, I know the FSD talked about where we are receiving our foods on our doors. I'm a bit traditional. I have a 20-year-old son. I always tell him, can you go to, and buy me this? And then he just goes to the phone. Hey, Keith, you haven't gone yet. No, it's being delivered. This kind of time saving, okay, that's what we are saying now. Then tourism. I don't need to call hotels. I just go online and book hotels. It does not only save time, but also it makes the tourism sector grow. But now let's look at the challenges which come up with money transfer system. You remember I talked about agents where my mother used to go and withdraw money, and it was a very critical, essential facility in the rural area. The dominant firm, Safaricom, had gone and made exclusive contracts with all their agents that you cannot trade with other people, with other competitors' money. And therefore, if my mother was in Airtel money, she couldn't withdraw from that agent. And therefore, her movement from her gate to the agent door was quite long. These are some of the kind of the consumer infringements we saw. And we, as a regulator, we moved into this and we told Safaricom to expunge those exclusive contracts, and now you can trade with any agent. But as I've indicated, now it has moved, there's no need of agents, is that you just play along with your phone and you buy and everything is delivered to your doorstep. The other issue, and it came out in our voting, then transparency in pricing. I thank Raphael, he headed this research in Kenya, and we were able to order all mobile money operators who are operating in the transfer systems and pricing to be able to be priced. When I'm sending my money now, I'm told that you are going to spend 3 Kenya shillings or 30 Kenya shillings. Do you want to continue? Before, there was nothing like that. The other issue which was there is high off-net money transfers, that if at all you want to send to another competitor, Safaricom was really killing you with those prices. And there has always been some interventions to ensure there's interoperability in money transfers. This is something which also came up, functional customer care. When you try to call your provider, you are always kept there in voice machines. I think some of the interventions we can undertake, and I think Silva will talk about it, it's how to improve on customer care. Platforms, I've talked about digital taxes. How do we address our disputes with the digital taxes? Some Ubers, when you lodge a complaint, you are told it's registered in Netherlands. When we talk about Netflix, if at all I have a challenge, it's registered also in Netherlands. How do we address this? Then the misrepresentation, long pages. How many look when you're booking a hotel, what booking.com tells you, or you just sign, I agree, and you move along. I think there's an opportunity for us to force them to be making representations which are readable in both feature phones and analog phones. Then superior bargaining position. Superior bargaining position, it's when the platform, you don't have an alternative in terms of the payment systems. Especially the SMEs in Kenya, they use the mobile payments. Now Safaricom can dictate those terms. We need to create policies where the platforms have that superior bargaining position for the regulators to be able to be protecting the consumers in the business transactions. Banking services, excessive pricing. We did an inquiry. where the USSD charges were very high. Transferring money from one point to the other point, we could be charged high, and then there was a lot of discriminatory that some banks were being offered better services than Safaricom. We intervened and we were able to reduce from 10 shillings to 1 shillings across all the transfers. Then banking services, cybersecurity. I'm a victim of that. Who insures that? These are some of the risks we are seeing. Data protection. Rafael talked about that. Banks and the platforms, they usually have a lot of your data. How are we working as consumer protectors and the Office of Data Protector, so that data is not misused by not only the people who hold it, or it can be hacked and used against you. Recommended approach. The key thing is that we are operating in very dynamic markets. The regulators do not know what is the future, or do not know the features of the products which is being offered. To balance between innovation and consumer protection, I perceive this need of visual market inquiries, so that at least you can appreciate the product or the service you want to regulate or to intervene before you curtail innovation. The other one is, I would challenge regulators not to be ticking boxes. When you do a study, ensure that there's a policy change. Identify champions within the government. A good example I can give was the case for digital financial services in Kenya. Is the central bank had said it has no mandate over that. We did an inquiry with the support of Rafael, and we highlighted the risks it is portending to the consumers in Kenya. And with that inquiry, the Central Bank of Kenya now has created regulations. Discussion of how it's implementing it's for another day, but at least we have a regulatory framework to manage the predatory pricing which was being accorded to the consumers. Then the other issue is that there has to be cooperation in enforcement between regulator and also the regulated. I've said these are products we don't appreciate. We need to appreciate what we want to regulate. And not only about the regulator and the regulated, but also the regulators themselves. These are matters cutting across the economy. Central Bank, Data Protection Office, competition authorities, and telecom operators. This is where we need to reduce competition for the regulators and reduce our turf and be able to come up with a convergence in how to approach this economy. Then the other issue is commitment decisions. I'm of the opinion that the regulators' work, it's not to punish or to retribute or to restitute. The regulators' work is to create or to make a solution, to get a solution and move on. Prolonged judicial mechanisms, they don't help. And therefore, in this sector, I have seen, in this economy, I've seen commitment decisions are very key in getting solutions and moving forward. The other issue is interoperability and data portability. Data is the oil of the economy now. Let's forget about the 1974 oil. When you have data and you invest in repurposing that data, that is how not only a corporate is making its competitive advantage, but also governments when they are using data for development. That's how we'll be able to be competitive in the world. And this data, it's not owned by the corporates, it's your own data. And therefore, there's need of creating mechanisms for interoperability. And last is that you always see corporates and banks share only your negative information. There's need of also sharing the positive. CRBs, most of the times they have been receiving the negative, but they have not been receiving the positive. Also in the insurance sector, I always see some insurance regulatory agencies fixing rates For Francis, who usually has accidents every day, he is paying for his motor vehicle cover insurance at 7% compared to Abel, who has never had any accident and is paying 7%. 7%. Why can't we use data for risk-based insurance? Thank you very much.